TGIF, everybody. Thought I'd say hello. Everyone doing okay? So, I had a haircut on Tuesday. Good morning, Alexander. Raj, Brock, Didier, Kevin, how are you? Ren, TGIF, Sinatra. Everyone doing okay? So I had a haircut on Tuesday, and it preceded the haircuts across the board in the markets. So what do you think of that? Many haircuts across the board, manifesting. Hugo, TJ, Humph. Nope, got rid of my Boris Johnson haircut. Okay, so let's start with, let me move this out of the way. Okay, so let's start with this. S&Ps. Now we have an up week, but we are closing back inside a wedge and underneath the 2-week off number 38.31. And you have to say, I took a shot yesterday. The glaring divergence pretty ugly. Okay, so there's one haircut really led by Bitcoin. Here's another haircut, gold. Failed from, a pretty important area. Still think we're going to make new lows here now. Okay, and haircut, Blake pointed out yesterday, Aussie right back at major resistance, turned it back down. And an interesting feature today is that it was a false breakout over 137 in cable. Look at that. And I was looking at EG yesterday. Now, here's a lesson. I want you guys, I know you guys know that I teach 3 drive formations, right? But I also teach my mentees that it doesn't always have to be 3. So this is what you had on Euro Pound yesterday. Could see it a little better on a shorter term time frame. See this? 1, 2, okay, on EG. So the point being, you don't always have to have 3. And even if you don't get long with just one nice divergence, for sure that's a reason to cover shorts and not be short anymore. It's not necessarily a reason to get long on a 2, but it is a reason not to be short anymore as momentum RSI is not confirming the new low. Everyone with me? Hello, Anna, Forex Gal, Monica. Okay, same situation in Canada yesterday. So we had a second drive right here. This is major. The low is in my opinion. And you're probably going to say, well, I'm late because you didn't buy the bottom. It's just starting. In fact, even if you bought it at the market now, you buy it with the attitude and say, well, I hope I am early and there is a correction so I could build a position. But this is a 2-week reversal in Canada. We close, we're not closed yet, but we need 26.88. So, I showed this yesterday. I think that there's potential down the road to rally, eventually first 130. But I think we could get all the way up to 136 in the weeks ahead. Just a normal correction. And this is happening without the Dixie doing much. It held, did not reverse. It's a down week, but higher lows are developing, in my opinion, in US dollars. So US dollar bottomed a week before the stock market topped, if this is a top. And really the lesson is, you don't always have to have 3 drives, that sometimes 2 is enough. Sometimes 2 is enough. Okay. So with this false breakout and failure in cable, now cable becomes your preferred short, which it hasn't been all the way down in EG. It's been euro. And speaking of euro, the bull bear line's right there at 22, and it's not hasn't taken it out. But now, if this is an EG turn, again, cable is going to be your preferred short. It's going to be more vulnerable and play catch up to the euro now with the turn in EG. So it looks like we have a turn in commodity currencies. Was a failing rally in Kiwi. Maybe Kiwi holds down here at the old neckline that it took out. But I'd say my preferred short now is the most overvalued one, and my preferred long is USD CAD. Okay, so we're getting the break in the S&Ps. Yesterday it just grinded, but we took out this alert. Blake probably had this alert at 38.40, and we're underneath the prior high. So not great action. Maybe there'll be a rally sometime next week to go with it. And this is important as well. We're talking about oil tried to make a new high right here, failed to do so. Look at the week on this. That's a pretty, that's a 2-week reversal in crude. So you're not late on any of this stuff. This is just the first week these turns are happening. Okay. So I used to feel that way, if I didn't catch it on the day or the hour, that I was late and I missed it. But you're not missing it. Actually, you have more confirmation, more reasons for the trade today than yesterday if you were speccing that we were going to get turns in all of these instruments, right? So what was a theory is now manifesting into reality right on your screen. I think that's pretty much, and the metals really getting creamed, and that's without the yen breaking out yet. So I've been talking about the yen since the bottom, and all we did was basically move sideways after the big advance from 103. And now we're probably threatening some type of downtrend. US dollar yen looks good. We'll see if we get any kind of flight to quality. Right now, the 10-year looks like it's down a couple bips. Hard to want to see higher rates if we're just beginning a correction in the S&Ps. Perhaps the S&Ps are going to trade down towards 36. That's going to be the next major line in the sand. Of course, this was a breakdown around 37.80. But, I think there's a possibility this was it. We'll see. Because, this was another thing that bothered me yesterday on the shorter term time frame. There was too much mo. And even if the S&Ps could generate some type of rally now for a new high, even the short-term stuff is going to diverge. Amanda sent me a tweet yesterday showing the throwover of a wedge in the S&Ps. And I said the signal is when it closes back inside the wedge, which I'm sure it's doing today. Silver, same thing. Look at how both silver and gold, I think it's on the 2-hour, failed from moving averages. Look at that at 26. And the same thing in gold, failed from its 50. And we just had this one more jiggle, but perhaps we're heading down for a third drive here and a third drive here. Everyone with me on the analysis today? I think it's a pretty pivotal week. Okay. Welcome to the presidency, Joe Biden. Okay. So here we go, a new regime and possibly corrections in markets. And hope everyone had a good week. Everyone on the team has the same mission here at ForexAnalytix. and that's to build up and identify traders every day. And that's what we do. And this is just in face. Okay. We're building up traders all the time that join. We have new traders that join us, and we have the patience to work with them. So they don't, at times, really don't even understand the semantics. Yeah, Brock, you've been talking about that for a while. That could be, you know, that could be the new variant spread. The UK variant is in 20 states. They're claiming so far the South African variant has not, they haven't found it here, but the testing here for variants is, not adequate yet. Things are about to change. Um, President Biden's going to take this much more seriously. Okay, so yeah, that was a very good theory and a nice background piece of the narrative to have you be a little, not be aggressively bullish with everything bubbling up over the last 2 weeks. Okay, so Humphrey and people are patient with you in the chat room to work with you and mentor you and bring you along. Do you feel comfortable in there? I know a lot of new traders don't feel comfortable because they feel insecure that they don't have the same type of knowledge base as veterans that have been doing it for a long time. But I know my team, and all of them have good hearts and care about people, not just about money. So if you haven't joined us yet, time's running out for a great deal. I think we're going to the 27th with this special.
Actually, I think it's till the 25th. I think it's till Monday, but
Till Monday? Yeah, okay.
something like
All
that.
right.
Yeah.
Well, let me get rid of me. See, Blake, I went to the barber. I said, give me a Blake Morrow haircut. And they said, we don't do flat tops here.
Wait a second. Yeah.
Oh, all right. Anyway, I got when I was a kid, they had cruise sticks of wax, to keep I had flat tops. All right. That's the only reason I'm kidding around with you.
I don't have, oh man.
Any grays? Oh,
My
yeah. I see a little
Do you
gray
guys
back
see the
there.
skeletons in my closet?
we all
I
have
need
them.
to put on oh geez, I don't even know how to do the screen.
All right. Anyway, so there's Blake. I know Blake has a lot of patience because they've allowed me to be part of the team for almost 4 years now. You need a lot of patience for that.
Yeah.
I'm a bipolar manic depressive, so not easy to work with guys like that. So
we put up with Steve, man. Come on.
oh yeah, so they had lots. Cell had lots of practice putting up with Steve, so I was a piece of cake for him to deal with. Anyway, I think this was an important week, Blake. Don't you?
I just was closing my closet door because
Yeah.
that was embarrassing. It's embarrassing enough that it's early in the morning, and this is what my hair looks like when I get up in the morning, and so I didn't need the closet door open.
Look at what Simon said. Been subscriber for years, and there is as much heart in this place as there is centuries of experience in trading across markets and recessions. Go for it.
Awesome.
Yeah.
Well, I'm going to go ahead and take the screen over from here.
Go ahead, buddy.
But I want to say, for those of you that are not part of the ForexAnalytix family, right now is the time to do it because, this is when we offer the best, pricing. We do that a couple times a year, and that's it. And when it's gone, it's gone. So, so take advantage of it. I know my video is on, but before I take myself off video, and you guys know I typically don't put it on video because it's 3, 4, or 5 o'clock in the morning here. I want to talk about the importance today of the Aussie dollar, and I think the Aussie dollar is going to really set the pace of this market. And let me remove this really quick. So there's like lot of banks are really focused on the Aussie for its risk on qualities, and a lot of banks are really focused on this channel support right here. And I am obviously as well. I think that's really important because we're currently respecting it. We actually hit channel support today, and we're holding it. So below 77 cents, I think, is going to be a big blow to risk appetite. And if we get below 77 cents, like for, let's just say by the end of today, we close below 77 cents. This is kind of important. I don't want to get too aggressive today because I'm already long Euro Aussie, pound Aussie, Euro New Zealand, pound New Zealand. I'm long some dollar Mexican peso, things like that. I've got that exposure. I don't want to be too aggressive until I know that there's a clean break. So, and remember, if we start selling off today, let's just say, let's just throw that out there. If we start selling off today, and today is the day where things start to reverse, remember, we've been moving higher for like 10 years. So if you miss the first day of some downside, it's not a big deal. It's really not. And if you think since post-COVID lows, which, by the way, I think without COVID, this market, if we didn't have this whole episode, the market would be rolling over right now. It would be, selling off. Wow, this sterling's getting smashed right now, which sucks because I am long some. But if the stock market, didn't have this, extra push from the Fed and fiscal support over the course of the last few years, we probably, or last, 6-12 months, the market probably would have been selling off, and we'd probably been pulling back as we normalize monetary policy by the Fed. But because of COVID, it's actually pushed us up one more leg higher. And in the meantime, it's really put a lot of divergence in the market as well. And I think that the markets are probably due for a bit of a pullback soon. So, if they do, and if we do start to see it, it's, if you miss like the first day, don't worry. It's not, I'd rather be confirmed that we're seeing a, move in the markets versus, just trying to anticipate it. I mean, I try to anticipate a lot, but before being super aggressive, I guess I should just put it that way. All right, guys. So I'm going to go ahead and get rid of this video. Oh, here we go. Okay, because you guys don't need to see me anymore. Really, you don't. Okay, let's talk about, since I'm talking about the Aussie, I'm going to write down support as being 77 cents. This is a big deal for me. Okay, that's support. Below that, if we really start to go below that, then you're talking about 76. Well, actually it's 76 cents, because this is where things really actually start to get a little bit more aggressive to the downside. And that's not something that would be breached today, I don't think, unless things really got out of control. But what the market's coming to grips with today is that we're probably going to see increased taxation on the wealthy and businesses, and that is going to have a negative effect on the stock market moving forward. And that's just something to pay attention to. So we could start to sell off rather aggressively. So that's one thing that we need to keep in mind. All right, resistance today, intraday resistance. We have this little trend line here, but I would think resistance now is at 77.40 intraday. So in case we get a move higher in the Aussie, which could very well happen, because look, this is the North American session. Only buyers are here in North America. So that's just what happens. Euro dollar. So the euro, I was thinking it was going to reach up to this resistance zone here, up to 122 to 122.20. That's what I was looking to be a seller, but the 122 level is a 50% retracement. So that should be resistance today. Support is at 121. Guys, I'm going to be hurrying through a lot of this. And just one last thing I guess I should mention really quick. The bias chart, you guys have watched me do this every day, and most of our community knows that I've been doing this every day for 15, 17 years. And I've just recently started sharing it with you guys here on the Face webinar. But what I'm finding out is that we just don't have any time. We don't have enough time to get it all in. And for me to really talk about the reasons why I'm like, okay, I'm going to look at 121 support. And the reason why that's such great support here is because I want to match it up with, you know, some fib levels and, you know, and some divergence and confluence between what this is doing and the S&P. I don't have time to do all that. So in the morning, because we have, you know, guests that we bring on and whatnot. So I'll be doing a special after the first of the month, or the end of the month, the 1st of February. We're going to have the Face webinar is going to be the normal time. But the first half an hour will be myself, Steve Stelios, Grega Horvat, you know, Andre, whoever else from the team, Polly wants to come in and talk with Dale. And then Dale will do his interview the second half an hour. And after that, it's going to be a private webinar for ForexAnalytix subscribers only. And I'll be doing the bias chart there, because then I can take my time and, you know, talk to everybody and answer questions and, you know, see the open of the markets, that type of thing. All right. So anyway, that's going to be just for ForexAnalytix subscribers moving forward. After the first of this next month. So that's why you should probably take advantage of the pricing. All right, so support, trendline, wedge support here. I really want to see this hold is at 136. Let's call it 136.10. We did, for right now, do a false breakout in the cable because, you know, as Amanda would say, it's really par for the course for sterling. And we did do it again, which we did over here and over there. So you can see the 24% retracement also comes in. The 78% retracement is at 137, 137.50, and that obviously capped the rally. So today, any rally back up to 137 is probably going to find sellers. Now, Kiwi. So here's the Kiwi back testing this trend line. Now, keep in mind, New Zealand CPI was really strong yesterday afternoon. It was bonker strong. I think 0.5% versus, or 0.05 versus 0.02. I have to go back and look. It's right here. Friday, Thursday, CPI, quarter over quarter. It was actually 0.2 expected via Bloomberg, came in at 0.5%. Quarter over quarter, year over year, you can see that rise in New Zealand inflation. Well, a lot of people bought the Kiwi on that number, and you can see we spiked up into resistance and then we came down. So now if we break back through 21 or 71.50, that's going to be pretty bearish in my opinion. So anybody who's bullish is holding on, and they're just holding on, hoping it doesn't break. 72.20 is going to be a resistance today. Oops, 72.20.
Hope is the oxygen in our life and the carbon dioxide in our trading.
That's a good one, Dale. I like that. I heard you say that one other time, and I think it's good. Dollar Canadian up against the 618. Real resistance is going to be 127.70, which is going to be more important in my opinion, because we have this nice descending wedge that's in here, but I would say support is at 126.50 today if we get down there. And by the way, let's see, just really quick. We do have Canadian retail sales coming out. I don't think that's going to be enough to move the dollar Canadian that far, but it could actually spike us up towards 127.70. We are still range bound. Dollar Swiss is heavy. And it was our chart of the day yesterday. I was really hoping we'd get down here. I was actually wanting to buy the dollar Swiss today, down here at 108 or 88.20. It's a 618 retracement. We're only finding support at the 50% now, so it's 88.40. I'm going to write down 88.20 just in case we get down there. And resistance is going to be 89.25. It's obviously key. We're still range bound dollar yen, or let's go dollar Norwegian krona. Nice respect. This is actually 88% retracement, I believe. Let me double check that. Really damn close. So I would think that now any dip towards 842, resistance will be 858, probably right up here around all these spikes. So and these are not great support or resistance levels. That's why you're not seeing asterisks around them. They're just, you know, I would just think that we'd peter out somewhere up here. Dollar Mex. I did tweet about this, and we are right up against resistance right now. Huge resistance right here because, you know, we kept noting that there's a false breakdown. Yesterday we talked about, hey, it sold off, but it's not holding, and then we got an outside day candle, and then today we're up huge. I mean, we're up over 1%, and I've seen the dollar Mexican peso up 2% intraday. So it's not. It wouldn't be uncommon for the dollar Mexican peso to be up at 220.25 later today. If it decided to go, it's not, like I said, it's not uncommon. Resistance right now is at 20. And so if we break above 20, we're probably going to be trading towards 2010 at least a little bit later today. That is one of the things that will signal risk off to me, is if the dollar Mexican peso breaks above 20 today. Dip should be bought down at 1982. Dollar yen right here. So we held the 618, which came in at 103.30. Resistance comes in at 104. Well, this trend line right here was 104 yesterday. Now it's it is 104. So
I barely gave anything back over the last week or two after. Bless you.
Dang it, I couldn't find the mute button quick enough.
All right.
Sorry, guys.
I think they say, since COVID, we get all these stats that sneezes are something like they travel at 150 miles an hour.
Yeah. What you guys probably can't see.
Faster than Steve drives.
Maybe you can't. Well, here, there's a microphone right here.
Yeah.
Right there. And so I have to hold and
it's all right, buddy. It can't get me through the screen. I feel pretty safe.
But it's I mean, I don't get people that don't hold they don't.
Oh yeah. How about people who wear a mask and leave their nose exposed? I see a lot of those.
But I get it though. Even though I don't do it, I get it because it's uncomfortable.
It is,
it's annoying. I mean,
yeah.
I know. If you get something like I wear a cotton mask, which
I can't breathe in those N95s. I can't breathe.
Well, yeah, I mean, I guess that's probably the better choice. But anyway, what I wanted to say though is I have the cotton mask, and I try to wash them, but I don't wash them like all the time. So I constantly leave it in my car or wherever.
Yeah.
And sometimes if it gets like a little you know, fuzzy in it, and then it's in my nose, and then my nose is itchy. It's annoying, you know. So I get the people that don't wear it over their nose. I don't think you're doing yourself or anybody else any good. Let's
No,
put it that way.
not.
But
You're not.
Guys,
Yeah.
good
Let's see.
morning. We just
Good
had Canadian data.
wait, well, where was Stelios? And
He's a slacker.
today.
I was just listening to your nose story.
No, I mean seriously, what good are you? What happened with the
Canadian data very strong. Retail sales.
Yeah,
Okay, well,
beat
maybe the
quite a
dollar-
lot actually.
2%
maybe the dollar
versus
Canadian can come down a little bit, because if it's not going to come down on that strong data,
this,
I sure
yeah.
as hell would not want to be short dollar Canadian.
No.
Right?
I think
I mean,
this week it bottomed.
I'm sorry, I totally missed the data. So here, this is Bloomberg. Let's take a look and see if we can. Yeah, wow, 1.3%, 2.1%. Wow. I mean, yeah, if you're dollar max is breaking. Yeah, I mean, if you just shorted the dollar Canadian because you're like, man, that's strong data, and then you shorted it, right now you're probably thinking, oh crap, I don't really want to be short anymore, right? I mean, that's what I would be thinking. So anyway, just some food for thought. Okay, let's hold on. I'm trying to buy some dollar Mexican peso on dips, and I have to keep I have to keep raising my orders, my prices. Keep raising my prices. It's inflation. Get it? Get it? That was funny, right? That was a good joke.
It was good.
Yeah, I keep having to raise my prices. All right, dollar max. You can see we're breaking out right here. Oops. Okay, and then we break above 20, and I'm trying to buy dips down to 1918 or 1980, excuse me, and I keep having to raise it a little bit just to try to get in a little bit more of an aggressive position. It's just not happening. Okay, let's go over to the S&P. So the S&P, as you guys know, channel resistance is holding. So, you know, look, we can fall from here. We can realistically fall from current levels 3%, not disrupt the uptrend at all. We can actually drop we could drop like 7%.
Yeah.
To the breakout point, or 6%, excuse me, from current levels, and really still be in a very solid uptrend. So think about that, guys. Think about what you're doing and the correlations that you're running based on what you're, you know, whatever you're trading, whether it's currencies or whatever. Let's imagine a 5% fall in equities. Doesn't disrupt the uptrend. Equities are still very bullish. What does that do to what you're trading? Think about that.
Blasphemy.
I mean, that probably puts the Aussie dollar at 75 cents. That probably puts the dollar Canadian at 129. And I'm just, you know, thinking out loud here. So, you know, it's not very far to the, it's not very far. It seems like it's far to the bottom of the channel, but it's not very far. It's only 3% from here.
Could do that in a day.
When's the last time you saw a 3% down day in equities? It's been a while.
Yeah, I think a few
COVID
weeks ago. Yeah.
What, really? Intraday? We've seen a 3% down day in equities a few weeks ago. I don't remember. I'm just
All right.
maybe
Yeah.
we did. I mean, maybe here.
Yeah, maybe even last Friday we were down.
Yeah. That's
2.5,
you're
3.
right, Dale. You're
Yeah.
right. You're right. And I'm wrong. But we're down right now 0.75% in S&P. So maybe being down another 2%, you know, being down towards the support here, that could happen, right?
I'd love one more high, because I mean the longer term
Stop
time
asking for
frames.
one more highs. I don't want one more. No more
You
highs.
don't want one? Okay.
No, I want
No
some two-way
more.
price action. We've had plenty of highs. Let's get a low, and then let's get another move up, and then let's get a low, and then let's start ranging. Let's start ranging a little bit so we can get some two-way price action in these markets. Because that's how we make money. You, me, and everybody listening in here. We make money when there's two-way price action. When it's one way straight up in equities, it's hard to trade. Doesn't give you
Two-way price action, high or much higher.
Yeah, and it's no fun for all of us. So I want the S&P to drop to 3,000, back up to 3,300, down to 3,100, back up to 3,600 over the course of the next couple months, and I'd be happy. And look, we can still be kind of where we're at right now, but not really go anywhere. And that'd be great. Hey, a boy can dream, right?
Yeah.
For sure.
Don't quit your daydream.
Yeah. Okay. Let's get back to what we were talking about and finish this up. So Steven because Stelios doesn't know how to do his job. We might as well give him some time to speak and talk about the reasons why he failed at his job miserably today. Just kidding, Stelios.
No comment. No comment, Your Honor.
All right. I know I'm failing here at my job. So 50% retracements coming in at 3,800. Resistance probably up here around 3,850. I would assume if we got anywhere close to 3,850, I would imagine that some sellers will be there. They'll be like pretty happy. What just happened? 30. Something's beeping at us.
Euro pound.
Euro pound, man, I can believe euro sterling so bid. Okay. Let's go back over to where are we at? Gold.
Euro sterling found support at a very, very nice confluence. We had
and we had a false breakdown, and that's the thing. Okay, so take a look at gold here. We might actually try to set up a inverted head and shoulder pattern. Like here's the head. You guys can see it, right? I don't have to draw it all out for you. 1830 is going to be support. 1875 is resistance. Did I say 1830?
Mm-hmm.
Yeah. Okay, so that's going to be important support. I think anybody who's bullish gold is going to want that gold. Okay, now I'm going to leave that as resistance. Notice we're range on everything. Actually, aside from US dollar, Norwegian krona is still bearish. I know it's up today, but it's really still in a very bearish trend. Everything else is more or less range bound at the moment. Okay, so there's your bias chart. It's done. So Stelios, explain, why weren't you here for retail sales? Just kidding.
Can't we just talk about the weather or something?
Hey, you know what? If you were busy scratching your butt and not in front of the computer, dollar Mexican peso is trying to break higher, so just keep that in mind. All jokes aside, though, really, if I was long the dollar Canadian, or excuse me, I'm sorry, if I was short the dollar Canadian, long Canadian currency after that data came out, and I'm sitting here watching what I'm watching unfold, like with the dollar Mexican peso, Aussie dollar is near 77 cents. It looks like it's going to break. You know, with all that happening, I'd be a little concerned. I don't know if I'd really want to be short the dollar Canadian right now. So anyway, just some food for thought. All right, guys. Steve, Stelios, I know I've given you guys a handful today. Or an earful. So I'm going to pass it over to you. Just remember, guys, if you're listening in, if you want to try to get ForexAnalytix for free, especially once we get past our pricing special, you know, but if you want to try to get ForexAnalytix for free, open a Pepperstone account. If you have if you're outside the US and Canada,
from that link,
you have to use this link right here to open your Pepperstone account. And then you can get up to 4 months free of ForexAnalytix. And then, you know, after that, you can really see, you know, hey, I'm really enjoying it. I'm enjoying the community. And then you can take advantage of the next pricing offer that we'll have maybe around, I don't know, in October next year. I don't know.
End of September, probably.
Yeah, something like that. So, but for those of you that don't want to wait, take advantage of this price because it expires very soon. All right. Thanks, guys. Have a great one.
Have a good weekend, Blake. Good luck today.
You too. Have a great weekend, Dale, Steve, Stelios. Talk to you guys later.
Thank you, Blaker.
Thank you. Hello, everybody. TGIF.
Hey, how are you? How are you,
TGIF still?
Very good, coach. Thank you. And I hope everybody had a good week. And so where do we start? Let's start with data, which is the least important thing these days.
Of course.
We had actually some data out of the UK today, which was pretty miserable. The retail sales, I mean, they were positive, but they missed by quite a bit. PMIs missed by a lot. Like services PMI last reading was 49.4, so roughly not growing, not contracting. We're expecting roughly the same. Came in at 38.8, which was a bit shocking. But we have to realize the situation in the UK, both in terms of Brexit having happened and also Brexit. I mean, obviously they have managed to secure some kind of deal with the EU, but we're all reading stories about all the lorries that are in kilometer queues in France or on the borders of France. Basically, there's going to be disruption. We know that. But that's one reason, and the other is we all know that the COVID situation in the UK is pretty bad. Boris Johnson yesterday said, I don't remember the exact words, but he said basically don't expect a release from lockdown before spring or something like that. And from what I'm reading, France is also on the verge of going into lockdown, just like the UK. So it's unfortunately this thing is just sticking and it's not going away. The vaccines are out. People getting vaccinated, but this is not, like Steve has very correctly said, this is not like you're trying to turn a bicycle on its on its wheel. This is a very slow process, and unfortunately, with businesses not working, many businesses not working, and unemployment high, unfortunately, some of these effects might be permanent, or they will be permanent. So we have to be wary of that and return.
That's why the markets have sold off so much.
Well, yeah, that's another point. But the central banks, the power of the central banks is so strong that people just don't care about fundamentals anymore. So, equity markets going up purely on anticipated inflation, asset price inflation, not actual CPI. But anyway, so the news from the UK is not good, and we're seeing the pound suffering today. I still think that, and I've said this from late December, I still think that we will see choppy price action, but in the medium term, and when I say medium term, I mean like a year from now, a year to 2 years from now, I think the pound will do okay, or should do okay compared to other currencies like Euro pound. I know it's rallying today, but I think we're going lower eventually.
I would be very, very careful here, Stelio.
Yeah, I'm not saying in the short term now. I don't have a position now.
Look at cable getting rejected again from this confluence, and look at where Euro pound found support.
Yeah, 1.27.
Yeah.
I had.
I think we could easily go towards what is it, 92 again? Of course, I think we can.
Yeah.
But
hello.
Yeah. Who's this? Somebody's calling Stelios, obviously.
Oh.
Sorry, I'm back. I cannot not.
You
pick
ordered
up.
pizza.
When the wife is calling, you have to pick up.
Absolutely. I've seen, I've seen the whips in the closet. So
yeah. Anyway, so I agree with you in terms of the pound. I think we could have easily another leg higher, but I think in the medium term, and when I say medium term, I said a year down the road or something like that, I think we're going to be a lot lower in Euro pound. And there's funny comments. Hand me a slice. Yeah, I don't have any. Okay, that's for the pound. In the US, obviously, we have Joe Biden, the new president, and he's already starting to do things. He actually did say something which I kind of expected. He said that we could see, he made a warning about the coronavirus and the deaths. He said we could see 100,000 deaths next month in the US. And it's, it sounds like a grim prediction. It could well come true, but obviously it's something that if it happens, it's not his fault, right?
Of course.
It's the previous.
And if it doesn't happen, he takes credit for it because
exactly. It's a no lose situation, win-win situation. So I think I would say the same.
Yeah, obviously.
So a lot of people are talking about this headline, what he said. Oh my God, and this and that. But just look past it and why did he say that? That's why I think he did. But otherwise, like I said before, the coronavirus situation is still ongoing pretty much everywhere. It's not going away yet. We'll have to deal with it, unfortunately. for a while longer, and hopefully the events and the effects are not going to be permanent or too much for certain.
Well,
areas
Steve, it
of the
looks
economy.
like Steve's sources, which he shared with us about a month ago, that this year is shot too.
Yeah.
Looking more and more like a good call by
Yeah.
your medical people, Steve.
What can
Yeah,
I
I
say?
mean, they gave me an objective opinion. I trust them
No.
because, they're people that are really good scientists, and, they just gave me the honest truth that,
Yeah.
it's like, I mean, things are going to be getting better as the year progresses, but still, this is
Yeah.
not going to be a normal year.
Yeah. Yes.
I think we
and-
could take normal out of the dictionary between central planning and
Yeah.
COVID and everything else, and
I
and
think there is a
politics.
decent. I think there is a decent chance, though, that at some point in 2022, things will have totally normalized, having to do with COVID,
From your
not
lips.
not the economy, right? Because
Yeah,
things
then
in
we
the
have to start thinking. Then the shift will be to paying the bill for COVID.
nah. Who's
Yeah,
paying the
it
bill?
will.
Nobody wants
The
to pay
Fed.
any bills.
Yeah, but the conversation will shift to that, I believe.
I think they'll try to avoid it because what kind of a conversation can you have about it? I mean, there are not many things you can say.
Okay.
Yeah.
Anyway,
Okay. One last thing I wanted to say. We did mention this last week. There's basically a rumor, or actually no, not a rumor. Basically, there's talk from Italy that Conte, the prime minister, is considering a possibility of elections. So Italians having elections, probably like the 9th election in 10 years or something like that. But
And they will keep on having them as long as they have this stupid election system, the one that Tsipras wanted to pass here as well, Stelio, which he actually has passed. But the good thing is that we've already voted it out, so we're going to have just double elections next time. So as long as the situation is like that, meaning that there is not easy for a party to have to form a strong government, and you get these in essence Frankenstein governments of parties that have many differences with each other. They'll keep having these political issues, and that's a huge problem because when you get coalitions that are so different from each other, the two parties, in essence what happens is that politically you don't get many things done.
Where's Mussolini when you need him?
Oh my God.
Hanging upside down in the town square, probably. Anyway, okay.
Cool. Okay, well, that's
enough history. History lessons. Boy, we do everything here.
Mussolini was actually definitely a psychiatric case, and I mean it in the literal way. I mean, I don't know if you've seen him talk and his gestures, and I mean the guy was nuts. I mean, clearly. I mean, you don't need to be a psychiatrist to figure that out. It's amazing that mankind has gone over periods that people like unequivocally supported people like Hitler, Mussolini, because both of them were very popular leaders. People seem to forget. I mean, neither of them took power by force or whatever. They were actually voted in, by a strong majority.
No, Hitler had to burn down the Reichstag to take complete power.
Yeah, but his popularity was it was very high.
Built the Autobahn and gave people jobs. The crash of 29 was his big opening, but he had one failed coup before that, where he went to jail and wrote Mein Kampf. So, try again.
Mein Kampf, indeed.
Yeah, I have a Kampf. Anyway,
everybody,
Steve,
everybody does.
Why don't we kind of see? It's Friday.
It's Friday,
what
and
your thoughts are for, like, the week. Take the
my
whole weekend.
thoughts, my thoughts are that I have my eyes on copper. We've explained multiple
Okay.
times why. You see here?
Yeah. Yeah.
Yeah, so copper seems to be wanting to make a move, and for me, that's going to be,
Yeah.
quite an important development if that's the
Yeah.
case.
Yeah.
Now, at the same time, Blake spoke about USD CAD and how it did not, in essence, react as expected to the good data. It's true. USD CAD is testing once again this trend line resistance. We're seeing the divergences, right?
Yeah. Yeah.
USD NOK. Anyhow, we've been showing the same things again and again and again. And bottom line, the situation is the following: we've had an attempt a week ago to break the recent trends in risk assets and the dollar, which didn't succeed initially. Now the question is, are we about to have another attempt, and what are the chances that this time it's going to succeed? Listen, we've said it many times, right?
Higher.
It's not easy. It's not easy to fade these trends. But on the other hand, we've said multiple times that this is not the place anymore to follow them, right? Because
Yeah.
everything is overblown. So you have two options here. Option number one, not doing anything. Option number two, trying to pick a top just because risk reward makes sense. Now, if you had done that previously, I mean, the previous week, it wouldn't have worked because you would have been stopped out in the vast majority of the assets we're looking for. Perhaps it works this time. I mean, the S&P, for example, as we're talking, is attempting to build an evening star formation on the daily chart. That's going to be quite important if, I repeat, if this is how it looks like, or even worse, by the end of the day, which is also going to be the end of the week, right? The US dollar might be again attempting after a little pullback to produce another leg higher. It might.
Right.
We have
Yeah.
several assets we have been looking for that are correlated. Here is the Aussie. As you see, the Aussie so far, no breakdown whatsoever.
Right.
But a move below 76.60 is going to be important.
Yeah.
Here is the Kiwi, might also be a flag. So as you see, and as I've said before, don't be just over optimistic because we have like half a day of a sell-off in risk assets. But that doesn't mean that you shouldn't keep your eyes open, because the more the days pass, the higher the chance that at some point, we have to have a counter trend move. I mean, it's the least thing we can do. I mean, it's healthy. So yeah, there are levels you can trade against if you want to take the other side of the market. Blake mentioned it at some point in the webinar. He said that, listen, if we are about to have a counter trend move, it doesn't matter if you lose the first day, because it should have plenty more for you to grab. And I totally
Right.
agree with that. That's why I think that it's better if you wait for a little bit of confirmation and lose, the very beginning of the move, than just, jumping the gun, as for example, somebody could have done last week, and just, keep holding the bag, because let's be honest, I mean, that's how things have been moving, right? Crude oil, also quite a negative day, as long with copper. Of course, still none of this constitutes like a big breakdown or whatever for the time being. I repeat, right? Yesterday it was looking like a triangle. It can as well be a flag. So yes, a move lower in copper, which seems to be wanting to break down. A potential evening star formation in the S&P, a move lower in crude, a move higher, a move lower in some of the commodity currencies against the dollar, or a move higher in the dollar against some of the commodity currencies. But no trend is broken yet. So it is a Friday. I don't think this is the day you want to be jumping on the market hoping this is a true reversal. I think this is the day you should actually be monitoring what happens, how we close the day, how we open on Sunday, and then we can have this discussion again on Monday with more data to talk about, and hopefully more technical developments to talk about, right?
Next week, I want you to be a one-arm trader instead of a two-arm economist. You know the expression. Oh no, it's hands. On one hand, it could do this, and on the other hand, it could do that. I want you to have an amputation on your analysis next week. What do you say, bro?
Whatever you say, whatever the crowd wants.
All right.
By the way, here's the DAX, if you want to look at the European index as well. Another possible interpretation. Although, as you see, the recent price action, really isn't anything bearish to talk about, right? I mean, we seem to be out of this wedge, but I mean, are we seriously accelerating lower? No, we're not. This is the FTSE. Also, poking its head below trend line support.
Yeah.
So, I'm really crossing my fingers and hoping that this time we can actually have some true reversals so we can actually get some action we can trade on, right?
And FTSE is so far below. It hasn't made a new all-time high for a long time, has it?
Yes, it hasn't, because don't forget that it was seriously pressured by the uncertainties surrounding Brexit. Yes.
Yeah, I mean that looks more like a big ABC than anything,
Yeah, I mean, two things were in essence pressuring the FTSE. One of them was, and the main one was clearly Brexit uncertainty. The second one is the fact that clearly we've almost now had a year, almost like it's, what is it, like 10 months of a clear cable uptrend, right?
Yeah.
I mean, when did we bottom out? 20th of March, and today is the 22nd of January, right?
Right.
So
almost
we've had, so we've had 10 months during which the cable moved from 114 up to 137.40.
Yeah.
So definitely these two factors have helped make the FTSE
restrain it,
underperform. Exactly.
I think it's one of the only world bourses that hasn't made new all-time highs, isn't
it's
it?
definitely one of the few. Yes.
Yeah, very few. Yeah.
Yes, and these are clearly the reasons of why that's the case. Now, having to do with gold and silver, if you remember, we had this conversation yesterday when I said that, my intuition was telling me that perhaps there is one more leg lower as a higher probability.
Yeah.
I was looking at this formation as perhaps a flat, like an A, B, C.
Yeah.
So far seems to be working nicely. Look at this. It's working on an evening star formation here, even more profoundly than in the case of the S&P. Here's silver as well. Also an evening star formation. And especially if we follow the paradigm, which is usually, sell-offs in equities initially, very initially, just take with them precious metals lower.
And Bitcoin was a tell this week, don't you think? And you talked about
that. Although Blake asked this question yesterday and I answered it, and I strongly believe it. I think that nobody trades risk assets based on their correlation to Bitcoin. Not only the opposite, meaning if we have risk selling off, Bitcoin and Ethereum are probably going to be selling off as well because they're the riskiest of risk assets. But I don't think that anybody's looking at Bitcoin and saying, Bitcoin is selling off. I'd rather sell the S&P up here. I really think that nobody does that. I mean, the move lower in Bitcoin and Ethereum is mostly technical. Don't forget that they've had parabolic moves to the upside, literally parabolic, right? I mean,
yes.
And these type of moves, produce counter trend moves that are like very, very sharp. So I don't think we should confuse the two of them. Although what is definitely the case is that if, a big if we actually form today some kind of an interim high in risk assets, that should put a cap in the rebound we're seeing Ethereum and Bitcoin having from the lows of the day, and it should help them correct even lower. So keep that in mind, because the
Okay.
opposite does apply, meaning if risk assets start selling off, there's definitely, that's a fact that will definitely affect Bitcoin and Ethereum. What goes up must come down eventually, and vice versa. Yeah, although to be honest, with how markets have been, during the past few years, uh,
Yeah.
that still remains the case, but it happens, much more rarely. So, keep that in mind.
Okay, well, it's time for an interview, and I'm going to interview you. What's your favorite
Color, like,
favorite
questions.
flavor of ice cream?
Bubblegum, actually.
Okay, and what do you put on your pizzas?
Cheese, turkey,
Oh my
pepperoni,
God. Yeah, all right.
and bacon.
All right. Okay. And what's your favorite sport?
Of course, football. And when I say football, I don't mean the fake thing with the watermelon thing that isn't a ball. I'm
Yeah.
talking about what you call soccer.
Okay, well, thank you for coming here today, Steve, to edify our community. And you've survived an interview with me, so you're now my trading warrior brother. And everyone, remember, please don't just count your pips, count your blessings, and really, everyone have a good weekend. Sign up so you could get ready for next week. Weekend's a good time. You get comfortable with the platform, navigate, et cetera, et cetera. Great job again, team, Steve, Stell, Blake, and we've laid it out on the floor for you guys. We do it every week, and we hope we're adding value to what you're trying to accomplish.
Thank you, everyone.
Marcetti will be a member next week, and anyway, guys,
See you on Monday.
that's it. Yeah, enjoy your weekend.
You too.
All right, take it easy, brother.
You too, Dale.
All right, adios, guys,
Bye-bye.
ladies.